For those serious about becoming successful, consistently profitable options traders, now is the time to build skills in technical analysis, market analysis, and applied volatility to get those results. We have multiple memberships, starting with our Go membership that teaches rules-based trading and our Pro membership that teaches more subjective trading. For more information, go to lockinyoursuccess.com/memberships.
Hello everyone, my name is John Locke and I'd like to welcome you to The Winning Trade, but first the required disclaimer material. Before we get going, I'd like to let you know the presentation is for educational purposes only. We're not broker-dealers or financial advisors and we're not making any specific trade recommendations. Also, please be aware your risk in trading options is substantial, so please make sure you are aware of all your risks prior to placing any trades. Also, please note that in this presentation we're using hypothetical computer simulated trades and the results. They're believed to be as accurately represented as possible, keeping in mind that live results can vary from simulated results for many different reasons. If this is your first experience with us, my name is John Locke. I'm a trading performance, financial freedom, and success coach with Lock in Your Success LLC, where myself and my mentors are here to help you win in the markets and in life as well. And today, we're going to take you into the realm of high probability options trading, to where we utilize option strategies to make money from the passage of time, rather than or in addition to price movement. This week's example is going to be of a completely non-subjective trade as it relates to price movement. The strategy that we're going to be sharing with you today is called the Bearish Butterfly. It's a strategy that we do on the Russell 2000 index. It takes advantage of a variety of market conditions, such as overextended uptrending markets, volatile and very volatile sideways markets, as well as volatile downtrending markets and smooth downtrending markets. And you may say, well, that sounds like almost everything, and it pretty much is. The strategy does well most of the time. The strategy requires a minimum of $5,000 per trade. The example size we're going to show you today is a $50,000 planned capital trade. Doesn't mean we get that much money in the position, but we may get up to that much money. So that's what we use for planned capital. Our profit target is twofold. If it's early in the trade and we hit a 30% gain on our $50,000 planned capital, or in other words, the position gets up $15,000, we're going to exit that at a profit target. And then if the position gets to 21 days to expiration, we're reducing our profit target to 10% or $5,000. Our exit loss trigger is our 30% of planned capital or $15,000. Let's jump right in. I will show you the trade setup, give you a brief explanation of the guidelines that we follow in order to trade this trade. So this is completely non-subjective from a price movement standpoint. We start the trade when our expiration cycle is 56 days to expiration. And our entry is going to look like this. We are going to put on a 50-point wing butterfly with our short strikes at approximately 17 to 27 points under the market. So our asset price is 2403. We are going to go into the short strikes of 2380. We'll do our 50-point wings. In this case, it's an iron butterfly, and it's 10 contracts. That's going to be our example size. So the actual date here is Friday, November 22nd, 2024. And our January expiration cycle in this case is 56 days to expiration, and that's what we're using. So from here, basically the way that this works is if the price goes down, we're going to adjust the position. If it goes down to the point where it's outside of our expiration tent and we're positive delta, and that's going to trigger us into a rollback, and we're going to take this position off if that happens, and we'll bring it back or roll it back until the position is about neutral delta, and we pick the strikes at whichever strikes give us the most neutral delta, and then we start over again. For the F side, this is a scaling in position, so as the market moves against us to the upside, we're scaling into a bigger position. And to do that, we use a control point. So our control point here is our short strikes at 2380. And if the asset price hits 2420, then we're going to add another 10 butterflies or iron butterflies here with 2400 short strikes. And then if we get up into 2440, we're going to add another 10 iron butterflies here at 2420 short strikes. And if we could start going from there, if the market continues to go up or the Russell continues to go higher, every 10 points we have a rolling sequence. And then there are limitations and other things to that rolling sequence. But that's the general idea of what we're doing here. So what we'll do is we'll just go from adjustment to adjustment. We'll show you what happened here and show you the outcome of the trade. And as things happen, certain situational rules will be revealed here. So before we get going, please a reminder to like and share our video and to make sure you subscribe. Helps us continue to bring this wonderful content to you. So it's Friday, November 22nd. Let's just go to first adjustment. And what ends up happening here is, and we'll look at the price chart. It's November 25th, so it's like the first day or first trading day that we're in here. We entered here on the 22nd, and we have this explosive up move in the Russell on this day. And as you can see, we're kind of in an explosive up move cycle. So what happens is the asset price goes all the way to 2450. Now, this is a position we only check once a day. So it's not management intensive. It's fine that we went past our add points and past our roll points right off. We just come in here at our checkpoint time and we say, oh, let's see, the asset price here is 2454. Our control point's 2380. I would have added a third when the asset price hit 2420. I would have added a third when it hit 2440. And I would have rolled when it hit 2450. So that means I have an add with short strikes at 2400. I have an add with short strikes at 2420. I have an add with short strikes at 2440, and I have to get rid of where I am now. So basically, I'm closing this position out, and I'm going into my triple butterfly structure because we exceeded our first add point, our second add point, and our first roll point. So we're going to re-enter the market here with short strikes of 2400, 2420, 2440. And this is the resulting position. We're now fully scaled in 3/3. And every 10 points here, so we're at 2450 was our last roll point. At 2460, we'll do another roll. At 2470, we'll do another roll, and so forth. So if I go here, let's just go to next adjustment. So what ends up happening is the Russell reversed, right? So a pretty hard whipsaw move. We settled in for a few days, and now we're starting to fall apart to the downside. And we're outside of our tent area, and we're significantly positive delta. So what we're going to do is we're going to start dropping out of these upper butterflies when we get this whipsaw action. So I'm going to come in here, and I'm going to drop out of my upper butterfly. When I drop out of my upper butterfly, it shifts my tent back a little bit, and now I'm back inside my tent here, and we're good to go. Okay, so what we're doing here is we're reducing size when we get whipsawed back. If we go to the following day here, what happens is the asset price drops again. So we had another significant down move. We are now outside the tent. We're now positive 47 delta. What we're going to do is we're going to drop size again. So we're going to drop out of my upper butterfly here. And if I do that, it's still not enough to satisfy what we need to satisfy for our delta limits, right? We're still outside the tent and we're back here. So this is actually going to call for a rollback. So I'm actually going to close the position out here. And I'm going to experiment at different price levels with my butterfly to get a delta that's relatively neutral with one butterfly. So if I do that, I end up being in the 2360 strikes right here. So that puts me at a positive 2.549 delta, puts me well inside the tent, and that is our adjustment. So at this point, we're up $3,990. And look at the type of whipsaw we had. Very, very significant whipsaw. So if we go from here, let me just go to the following day. and then one more day here. We end up getting the index really falling apart on us. If you take a look at our charts here, take a look at this price move. It's insane, right? We had, like I said, we had this crazy up move when we started, this 2-day really strong pump up, and then the index just fell apart to the downside. And look how well this trading strategy is surviving this. It's really quite impressive. But what's happening here is now we went back down again, and we lost a little bit of P&L. We're still up about 23.40. We're outside our tent. We're well positive delta. We're going to roll back to a neutral delta position. And again, we might have to experiment with a couple of different options here, but I'm going to roll this all the way back into the 2270s. That puts us at minus 1.98 delta, which is relatively neutral. And when we do this too, by the way, we're now resetting our control point. So now our control point is 2270, and then we're going to have our scale in just like we did before. When we get to 2310, then we get to 2330, and then we have a roll sequence starting at 2340. So it's just the same thing over and over again. It's really not that complex. It looks more complex than it is, I should say. So anyway, that's what we have on December 18th. And then from here, let's just go forward maybe a week at a time, and we'll see how this matures. So from here, if I go to, say, the 31st, the asset price finally gets into a consolidation, right? So after all this crazy price movement, which is fairly common, right? We get a lot of wide range price movement, and then a lot of times we get into a consolidation zone. That's really all we need. So by now it's December 31st, and we are 17 days to expiration. So our profit target now is reduced to $5,000 because as we get closer to expiration, we just want to get out of the trade because it hasn't gone so well. If I come in here and I just go to the second, we end up here and we're up $4,400. And then if we go to the third, we get a decent size up move. We get a bit of a relief in implied volatility. And next thing you know, we're at 53.60. We're under 21 days to expiration. So our profit target is now $5,000. We've exceeded that number at our checkpoint time. The trade is closed, and we take our $5,360 profit, and of course we move on to the next trade. But one of the things we want to point out, or one of the reasons I use this example, is because this is completely non-subjective from a price movement standpoint, the way that we manage this. And despite the crazy amount of price movement we've had and the huge whipsaw, we still come out with our profit target number of 10.6% of planned capital in only 42 days. And that is why I love the Bearish Butterfly, this episode's winning trade. If you like what you see, I invite you to come on over to lockeinyoursuccess.com. That's LOCKE-inyoursuccess.com, and discover how you too can follow along with the Bearish Butterfly and many other great non-subjective trading strategies as they unfold during our weekly trade updates that we have for our Go members. Also, come on over to thewinningtrade.com. That's thewinningtrade.com. There you can learn about upcoming winning trade presentations. You can explore past winning trades. And of course, while you're there, make sure to check out our free trading performance podcast, where you can learn to skyrocket your trading regardless of the type of trading you do. Have any questions, comments, or anything else you'd like to see in the next winning trade? Please post that into the comments below. I answer comments and questions personally. Thank you for joining me, and I look forward to seeing you on the next winning trade.